This is the briefing for Friday, May 17th. Well, in Tuesday's trading, we had a little bit of a spurt higher that basically came up and tested upside resistance based on the PPI numbers. And then, of course, on Wednesday, the CPI numbers came out and the market just exploded beyond resistance and put in new all-time highs. Now, the question is, what happens from here? Now, we did have a news event that changed the perception of value for certain on part of traders and investors. But as you can see, we came through. This was Wednesday's trading that brought us right through this upper resistance area. Now, originally we had been looking at this as a three-step counter trend rotation and basically came right in this area here where we expected the possibility, if it was a three-step counter trend rotation, that we'd see some type of move back to the downside again. But it didn't. It broke out to the upside, and that gave us a pretty good indication that the three-step counter trend move was the lower probability, where I thought it was going to be the higher probability until we got this breakout. And then, of course, now that made the higher probability the fact that we were going to test this upper resistance area and potentially break through it. Now, a couple things to keep in mind here. In all degrees of time, when we get a pause, like this pause or this pause, it is common for the market to pause at a upper or lower key reference area. In other words, it will pause as it approaches resistance or support. And that pause can happen just below resistance, at resistance, or just above resistance. And the same thing is true for support. And what happens there from a psychological perspective is everybody who's looking at a chart understands that it is resistance, and in this case, this 450 area in the Qs. Now, based on that, they know that this is an area of unfair price. In other words, every time it tested 450 previously, it sold off or it was unable to break through. So traders step back. Then all of a sudden you get a probe that tries to probe up. So traders will come in and start to probe to see if more buyers will come in and drive price higher. And in some cases, if they do, it'll attract more buyers. And if new buyers don't come in, then you get a pause or you get a rotation back through the range. And I call that basically a false breakout. Now, I'm not saying this is a false breakout. What I'm saying is that it is typical for a market at, under, or around a key reference area for it to pause. That also gives us an area of good trade location, because if now we've got about 3 days where we've tested this all-time high, this happens to be the Qs, where we've tested the all-time high. If we get a breakout from there, then that would suggest that this is not a false breakout and we're going higher, potentially in a fairly good move. If we were to break to the downside, that would suggest that this pause here is exactly what I just said, a pause, and we're going to see rotation back through the range, keeping in mind that this is a daily chart, so you can see the time frame that we've been in this rotational pattern. This goes all the way back to January 19th of this year. So what happens here is just very, very important. Now, the other issues involved with the market right now is the fact that volume has been falling off pretty dramatically. This is volume in the Qs. And you can see that we got a little bit of an increase in volume on Wednesday. Thursday's volume dropped off, and then today's volume was basically flat in terms of yesterday's volume as well. So as of right now, the market is not attracting new buyers. If we were attracting new buyers, we'd see volume beginning to increase somewhat. And it appeared that we were going to see that right through here as we got the breakthrough through resistance on Wednesday. But then, of course, it's fallen off during this pause. And that is common for volume to fall off during a pause. So what we want to see is we want to see a breakout of this area in one direction or another. And we want to see volume confirming that. Now, the other thing is happening is breadth is declining. So we're not getting this market from an internal perspective is not getting stronger. In fact, it appears to be getting weaker. Now, let me switch back to the spiders. And you can see the same thing is happening with the spiders. Here's the rotational pattern. Here was a rotation or a pause at upper resistance that failed, and we got this rotation to the downside. Then we got this move back to the upside, a little bit of a pause here, and now another pause just above this 525 area, which is support now that was resistance. Volume falling off over the last 2 days, and breadth diverging, as you can see here. In the Russell, the IWM, it's basically the same thing, except it diverged from an intermarket perspective and did not break out to new all-time highs, as you can see. But we are in this rotational pattern once again, and volume falling off. Now, volume in the IWM picked up slightly over the last couple days. That may be a signal that there is more buying to come, potentially the first part of of next week. But you can see that breadth is diverging here as well. Now, I want to bring in my 15-minute charts here. So what I've done here, this is a 15-minute chart, and I typically trade off a 15-minute chart. So this is the spiders. This is the 525 key reference area that I referred to here. I'm sorry, let me get back to the spiders that I referred to here. This is the upper resistance area. So basically, this breaking through this area again would suggest to me this was a false breakout, and we're going to see some type of rotation potentially back through this range. Interestingly enough, today 450 was the upside resistance area in the Qs. Let me see if I can get that back up here again. That's this area right here, 450 in the Qs. So that's that area right there in the Qs on a daily basis. This is it on a 15-minute chart. We broke through it today, and I thought that might bring in some additional selling. But as you can see, there on a 15-minute chart, there's a buying tail that's right there. And buyers came in, drove price above 450, and then drove it back up again. So you can see that there was some buying that came in that traders did not want to see the Qs below 450 again, and buyers came in. So that is positive for the potential for another breakout to the upside. Trading through 450 on an intraday basis would suggest then that we're going to see potentially some type of rotation back through the range. So while we're paused here, we've got basically a pause for 3 days of trading, actually 2 days after the breakout on Wednesday. So it's going to be really important what happens from here. Watch the high from yesterday. That's the high that if it's broken, then we're breaking out once again to new all-time highs. Same thing is true for the spiders, and the same thing would be true for the Russell. Now I want to look at where we are in terms of overbought and oversold. We're basically neutral, so that does not give us an indication as to of being overbought or oversold. We're neutral, so it really gives the market the opportunity to trade in either direction. Now the other thing, this is the percentage of stocks above the 50-day moving average, percentage of stocks above the 200-day moving average. There's a pretty big divergence here. You can see the divergence in above the 50-day moving average as opposed to what's happening with price. A little bit of a divergence with the 200-day moving average, but that's going to be a slower moving average. The 50-day, you're going to see more stocks trading below their 50-day moving average before you see the stocks trading below their 200-day moving average. In terms of the NASDAQ, you can see percentage of stocks above their 50-day moving average diverging as price continues to go higher. And about the 200-day moving average, it's basically flat. And once again, that's going to be a lagging average. And in terms of the Russell, you can see what's happening with the 50-day moving average in terms of price development, and then the 200-day moving average there as well. So basically, the internals, and it is common during a pause phase for volume to fall off. It is common for breadth to potentially weaken or strengthen depending on where the pause is. And it is common then for volume to fall off and for the other internals to pause as well. But it's going to be very, very important the first part of next week. If we get a breakout to the upside, it's going to be very important to see volume beginning to increase. Now, once again, this trend line I put down here is basically the lower average of volume going back pretty significantly, and you can see that and this part of this rally, volume was way below what the average low volume would be for the spiders, and we're trading right at and just below the same thing over the last 2 days of trading. So the internals are weak. Price development is strong. The trend is back up in this instance. This was a greater degree time and price counter trend rotation. We're in a greater degree time and price rotational pattern. What happens here now is just very, very critical for the first part of the week. I'll pick this back up for subscribers on Monday. Have a great weekend.